Hi everyone! Traders continue to get new reasons to sell off the US dollar. The strongest reaction was caused by Jerome Powell's recent announcement. The Fed chair dropped a hint about a possible slackening of the key interest rate hike. Thus, in December, the regulator is highly likely to raise the benchmark rate by 50 basis points instead of 75. What is more, macroeconomic reports have also confirmed that inflation is slowing down. This, in turn, intensified expectations of a less hawkish monetary policy tightening. In our video review, we will find out what events will shape trader sentiment early next week. Next week is one of those rare weeks when the flow of macroeconomic events starts on Monday. As a rule, important data is published from Tuesday. Thus, early on Monday, traders will be waiting for China's services PMI report. However, the same data from the US, prepared by experts at ISM, will be of higher importance. Now, markets are very sensitive to signals about a lower pace of the key interest rate hike by the Fed. According to the forecast, the US services PMI will decline to 53.9 points, still remaining above the 50-point threshold that separates contraction from expansion. While traders are searching for hints about a slower interest rate hike by the Fed, the Reserve Bank of Australia has already slackened their pace. Australia's monetary authorities continue to evaluate the current economic conditions. Although inflation is really high, they prefer to take measures that will have the minimum negative effect on consumption and business. Thus, in October and November, the central bank raised the benchmark rate by 25 basis points instead of 50, as planned earlier. On December 6th, the RBA may do the same, which will slightly weaken the Australian dollar. On Tuesday, traders will also focus on the US trade balance. Forecasts for changes in imports and exports are still pointing to moderate foreign demand. A report for September unveiled a rise in the trade balance deficit with Mexico and the European Union. However, there was a rise in the exchange of goods with China. In the report for October, negative trends are likely to be recorded in trade with China. The fact is that Chinese production is falling amid an unstable epidemiological situation. On Wednesday, China will disclose its trade balance report for November. Both exports and imports are likely to drop, which will be considered a sign of the approaching global recession. This may prevent traders from trading risk assets. The Australian dollar will suffer more than other risk assets. The fact is that it is a national currency of a country that highly depends on China's production, since the better part of exported commodities comes to China. However, the Australian dollar will have a chance to recoup losses after the publication of Australia's GDP data for the third quarter. Analysts suppose that in the third quarter the country's GDP grew by 1.1% on a quarterly basis, while on a yearly basis the economic growth accelerated to 6.5% from 3.6%. This encouraging data proves that the Reserve Bank of Australia has chosen the right approach to combat high inflation. Economists have recorded the opposite trends in the Eurozone economy. There, inflation remains extremely high. That's why the European Central Bank has finally decided to switch to an aggressive and active monetary policy tightening. Thus, the regulator raised the benchmark rate by 75 basis points. However, every new macroeconomic report may unveil signs of a recession. Notably, the previous report showed a rise of 0.2%. It means that the ECB will continue raising the benchmark rate at the same pace, thus encouraging buyers of the euro. Meanwhile, in Canada, a central bank has followed the steps of its colleagues from Australia. At a recent meeting, the Bank of Canada raised the key interest rate by 50 basis points instead of 75. On December 7th, the regulator may choose even a more cautious approach, raising the interest rate by just 25 basis points. Investors are unlikely to show a positive reaction to such a decision, but the central bank primarily intends to keep the economic growth. These events will be in the limelight among traders in the first half of the next trading week. And we keep following events and provide you with the most relevant news and analytics. Stay tuned and see you.